Now, there are two types of testing. Broad group. You can have what we call the analytics, which is substantive analytic testing. Or you can have substantive test of details. And what determines when to use substantive analytics or test of details testing? In fact, one thing you need to know is that this one is, in quotes, less work. Because, or less, require use of less documents. But this one is about documentations. And you will see it. Let me quickly speak about substantive analytics. What analytics is all about is just auditors trying to form expectation on their own independently what those balances should be without necessarily going into documentations. Give me invoice, give me all of that. They don't want to do that. They want to do analytics. And in that case, some terms and conditions must apply before you can use analytics. Number one, the entity must have good controls. You must have done evaluation of controls and the controls are good. And also, you must be able to predict the balance. The balances must have predictability. Because if not, you cannot form independent expectation. Yeah? So there must be predictability of relationship between the data. Like, you know that, for revenue is price times quantity. So you know the relationship. You know the way the price moves and quantity. So you can say, I want to form an independent calculation of revenue. What revenue should be. Yes, that is substantive analytics. You're just forming your own expectation independently. And once these two criteria are met, and you decide to do substantive testing, analytics, then there are different examples of analytics that you can do. In fact, there are 4. You choose whichever you want to use. And the first one is trend analysis. And that is trend analytics. In that case, what you are doing here is you are comparing year-on-year figure. So you are using the previous year figure as your expectation of this year. You are saying that if revenue is 40 last year, I expect to be 40 this year. Yeah. It's a reasonable expectation. It's left for the client to explain to you why it is not different. And that is where the auditor started. Why is it 40 last year and this year is 65? That's trend analysis. You are comparing year on year. You are using previous year as your expectation for this year. Another one is the benchmarking. In that case, you are comparing to, your expectation is the peer industry. That's what you expect your clients to have. You expect them to have the same thing as their peer or industry average. And if it is not so, you expect your client to explain where their own figures is different. Their account receivable days for the industry is 30. Why is my client having 45? They will explain. That is part of the analytics. Another one is the variance analysis. In that case, you are comparing with budget. So you are saying budget is your expectation. If you have budgeted 30 million for staff cost, I expect it to be 30 million. Why is it not 30 million? Because you need to tell me. If you have budgeted 30 million, I believe you have planned for the year, the number of staff you will have, the new staff you will employ, the new staff that will be promoted, the one that will leave the company, and you have budgeted based on that. So why is your actual not your budget? That is what this will bring out. So that is audit as well. But auditors can still do their own calculation as expectation, just like as I was explaining here. So auditors' computation can also be an expectation of analytics. So these are 4 methods of performing analytics that you can use. Yeah. So if the question is very specific on analytical procedures, please make sure you are within these 4 zones, and we will see. However, the common ones is usually to just open it up to say, give procedures, and they don't care whether it's analytics or it's test of details. Yeah, but please, I need you to know the difference between analytics and test of details. You see all the analytics that I've put here. I'm not asking for invoice. I'm not asking for good receipt notes. I'm not asking for any document. What I'm doing here is to work with figures. I want to form expectation. Yeah. So in terms of step, let me give you step for analytics to help you. Step 1 is usually to understand. Because if you don't understand the balance, you cannot form expectation. When you understand the balance, okay, this is revenue. Revenue must be price times quantity. Then you can now form independent expectation. And remember, your independent expectation can be any of those 4 above. It can be previous year, it can be industry average, it can be budget, or it can be your own auditor's calculation. Once you do that, then you can calculate the difference. The difference between auditor's expectation, which is step 2, and the actual figure, which is on the financial statement. Then you need to determine if the difference in step 3 is significant, that is material. Because remember, we will not sweat on items that are not material. So if the difference is not material, if the difference is just 1, the difference is just 2, why should you bother? But if it is material, then you need to investigate the difference. So investigate and resolve all material differences. And those are the steps you need to know. 5 steps for analytics. Make life easy. Whether you are doing audit as your job or it's for exams, you need to understand the steps. It makes your life very easy. And once you can do this, you're good. Analytics procedures are very important. In fact, it's the only procedure that you always do, whether you are at the planning stage of the audit, or you are at the executive stage of the audit, or you are at the reporting stage of the audit. You always have to do analytics. Very important. Please take note. Now, we want to talk about the test of details. And for test of details, we will need to be taking each of the balance one after the other. So this is when you now have a lot of procedures to be developed, to be generating. But remember what I said. We will always start from assertions. And our focus is to cover all of these balances in your syllabus in the next series of videos I'll be making.